Good morning, good afternoon, or good evening, whenever you're choosing to tune in. Just know we appreciate it. This is Full Disclosure, brought to you by DisclosedRx, and we break down what is happening in the PBM world and bring clarity to an otherwise opaque space. I'm Chris Estep, joined with me my co-host Andy Rodriguez, and together we're directors of business development at DisclosedRx. On today's episode, we brought in the Vice President of Sales for Disclosed and someone who has seen the industry from every angle. He was a broker, an employer, and now on the PBM side. So basically, if anybody should know where the bodies are buried, it's him. And because he is also our direct boss, we'll really try hard not to ask anything that gets us written up.
Good luck with that.
Agreed. And to further protect ourselves, just a quick note, everything you hear on this podcast reflects our personal opinions and those of our guests, not DisclosedRx or any other affiliated organization. We're here to share perspectives and conversation, not to provide official guidance or advice.
And really, before we jump into this, Brian, why don't you give everyone a quick introduction about who you are, what your role here is, and what makes your perspective on this industry a little different than most?
Yeah, absolutely, Chris. Hello, everybody. My name is Brian Schram. I am the Vice President of Sales for DisclosedRx. And my perspective is a little bit unique. I have had the opportunity to not only be a member, like all of us, utilizing a pharmacy program, but also I've been a broker. So I've been in a lot of our listeners' seats before, working hard to help their clients save money. I've been a representative of an insurance carrier, Priority Health Insurance in Michigan, and now working with DisclosedRx as a PBM. And understanding this topic and the financial impact it has on clients and members is really a key motivator for me to move over to DisclosedRx from Priority Health. It was a very unique opportunity that came up and came over in January of 2025. So really excited about the work we're doing.
No, absolutely. I mean, we've mentioned this before, but you have seen the industry from every angle of this board. So I'm really glad you're here. We both are. And because once you've seen or been in a couple of different sides of the table, you start to see where things can get messy, where the money actually starts to move. So, I mean, pharmacy benefits in this case usually gets talked about in silos. Brokers see it one way, employers experience it another way. And let's face it, PBMs, we have our own view of the world. And that's where blind spots can really start to come in, because when someone actually has lived in each of the roles, they can connect dots that most people don't even know exist. And in an industry where everyone's got a story, that kind of perspective is a huge deal. Now, a couple of questions we have for you. You've been a broker, an employer, and now on the PBM side. What's the biggest misconception each group has about pharmacy benefits?
Yeah, that's interesting. I mean, really having sat in all three roles, there's really a blind spot each group has around spread pricing. And as far as brokers are concerned, they don't actually ask the PBM, what are they making? What type of money is that PBM making, and how are they making it? Admin fees and rebates, they really need to be scrutinized, and they usually are, but spread isn't. So it's pretty rare that people are digging into the spread pricing. And if you're not actually requiring pass-through pricing as a broker and having the full audit rights, you just don't know what you're buying. So from a broker standpoint, they have to start truly asking the question, what is the PBM making and how are they making that money? Employers, they don't even know spread pricing exists. They have no idea. And especially a lot of that spread pricing is in generic utilization, where it just seems like smaller dollar amounts, but it's a much higher volume of claims. And the employers they assume that what they're charged is actually what the pharmacy is getting paid, but it's not. And a good PBM is going to help eliminate that conflict of interest and just eliminate that entirely by showing exactly what the pharmacy was paid. And then on the PBM side, really the rationalization is that spread is just kind of how the industry has worked. You see a low admin fee, they collect some spread, but the dollar amount involved in the spread is so significant that the PBMs have tried to keep that a secret, quite simply. So the best PBMs have proven that that's just a cop-out. That's not how the industry has to work. And you can truly build a sustainable business on transparent admin fees. So if your PBM is actually resisting that transparency, you truly have to ask, what is it that they're hiding? What are they protecting?
It's usually the bottom dollar at the end of the day, to be honest
Absolutely.
with
Yeah,
you.
absolutely.
Now, Brian, back when you were a broker and then on the employer side, what was the first sign that made you think something about this pricing just isn't adding up?
Um, Really, the invoices. That was a big thing. I remember, one day just looking at it, saying these numbers aren't aligning between some reports that I saw and invoices. And as a broker, I started noticing that clients would ask simple questions like, "What did this drug actually cost?" And I couldn't get a clear answer. So the explanation was always a bit complicated, and that complexity I realized wasn't accidental at the time. So the more I learned, when I moved into the employer side, it just got more personal for me. And I'm sitting in a benefit review meeting or some type of meeting with my broker, and when we're talking about the PBM, they're showing me rebate numbers and ingredient costs and some of the basics, but it just wasn't reconciling. So the math, when it doesn't add up, you got to start asking the questions. And I could never really find out what the pharmacies were being reimbursed. So the moment that kind of crystallized for me was realizing that the PBM had no incentive to tell me that spread existed. I mean, that's money they are making, and more really, it's more money that I'm losing. So nobody volunteered that information, and that's when I knew the model itself was a problem, not just the numbers.
Solid point, Brian. Once you were on the PBM side, what did you learn about incentives or the contract mechanics that completely changed how you interpret pharmacy spend?
Yeah, getting inside the PBM, actually seeing some of that inside knowledge, it was interesting to see how some of the contracts are written to be, I mean, they're meant to be vague, right? And the language in there, it provides the PBM a lot of ways to get out of things that they may promise, as opposed to really helping the client directly. So the biggest revelation that I saw was actually rebate guarantees. From the outside, a big rebate felt like a win. You thought, oh, look what I'm doing for my client. But from the inside, what you realize with those guarantees are built around keeping high cost brand drugs on the formulary. So if a PBM is collecting a certain percentage of those rebates, they'd rather have more rebates. And obviously that means the PBM's revenue is going up when drug costs are going up. So there's no shared incentive to lower the spend. Sorry, like the second, I guess would be the reconciliation. Most employers are never auditing. They're never doing an audit. They're not auditing the contract language. Sometimes that contract language is written to make sure that they can't easily actually do an audit. So it's really important to make sure they have full audit rights. And then, really being with a good PBM just to change that model completely. Flat admin fee, full pass-through pricing, actually having incentives aligned with the client to lower their costs. So once you see that that's actually possible with PBMs, you can never look at that traditional PBM contract the same way.
I agree, and it makes it more simplified.
Exactly.
Brian, you've been around this industry long enough, and I'm sure you've learned that if something is overly complicated, somebody's probably making money on it. And case in point, spread pricing. And for the folks listening, spread pricing sounds like jargon, but it's actually pretty simple. It can get really expensive really fast. The PBM bills the employer one amount, pays the pharmacy a different amount, and then pockets the difference. On one claim, you might never notice it, but across an entire plan, those little spreads can turn into millions in extra cost. And when you start seeing everyday meds marked up by the thousands or even 10,000s of percent, you can't help but to ask, how did this ever become normal?
Yeah, I mean it's a very very fair question. When you look at it, we all know when we overpay for something. We're all at the register when you scan it and it doesn't come up as a price that's advertised. You bring somebody over and you point that out to them. Why is it so hard in the pharmacy space to spot when this is actually happening?
Because nobody wants them to find it. That's why. They're just not showing the right data, really, guys. If you think about a group that has 9,000, call it 10,000 claims, and 90% of their claims are generic drugs. So if you have 9,000 claims that are generic drugs, and somebody's showing you a nice cheap admin fee, but they're making an extra $10 per claim on every generic because of spread pricing, there's $90,000 that the client is paying that they don't realize they're paying. So, they don't have the data. So the PBM sends an invoice with, what the employer owes, correct? They don't actually send a report what the pharmacy got paid. And the gap between those two is the spread. It never appears on any document the employer sees. It's truly invisible by design. So when employers do ask questions, the explanations tend to be a little bit complicated. And really, the complexity is meant to be there because they don't want the client to dig into the data. And thankfully, we're seeing some of these things change in the market, but there's still so many PBMs out there operating. I would say, the vast majority of them operating where spread pricing still exists. And the only way to see it is to require pass-through pricing, require the full audit rights, which we already talked about, and require the pharmacy level claim data in the contract. So most employers don't ask for this, and most PBMs are not going to volunteer that.
No, I mean, why would they? You're eating into their bottom line, their revenue, everything, right? It's a quintessential rug that they just sweep everything under. So, Brian, when you explain this to a broker or an employer, really, what's their first reaction?
Well, first they question whether I'm right or not because they feel like they've missed something, right? Nobody likes to be wrong. Nobody likes to miss anything, and it's no fault of the brokers. It's part of the industry. So usually it's some disbelief, and then they get a little irritated, a little angry, and when they see it, they're like, "Wait, is that even legal?" And the answer is yes, because it's actually buried in the language of the contract that whether they didn't read it appropriately, their legal counsel didn't read it appropriately. People get very concerned when something is missed because, in general, people want to do what's right. So then once they missed it, they realize, they get a little angry, and the employers, they feel deceived. They feel like the broker didn't do their job, which is not necessarily the case, but the brokers do feel embarrassed because they didn't catch it. Or worse, they wonder, was my broker complicit without even knowing it? So this is an area that brokers really need to dig in the contracts. But that reaction that sticks with me most is when someone says, "We've been on this PBM for 10 years." And because that's not 1 year of spread, that's a decade of it. And that's a lot of money. The example
Right.
I gave, $90,000 over 10 years is, my public school math puts that at $900,000. I'm in sales. Let's call that an even million, right? $1 million, right? And that's usually the moment they're ready to have a different conversation about what transparent PBM model actually looks like and how it can benefit them.
Absolutely. And I think this kind of drives what we're starting to see now, which is lawsuits. I mean, we've seen cases where lawsuits are being filed because some drugs are being allegedly marked up, not over 100%, because that'd just be insane. No, I'm talking about over 38,000%, and certain claims even went beyond 50,000%. So when you see numbers like that, what does that tell you about the system? Because really, in these situations and these lawsuits, it's just the employees that are suing their employer over this, not the broker, not the PBM.
Yeah, absolutely. The numbers are shocking, but for those of us in the industry, it's not surprising because spread pricing really doesn't have any guardrails. Traditionally, it has not had guardrails, and when you look at some PBMs, they're publicly traded. It's an easy way to drive more revenue. Again, it's in the contract, so it doesn't make it illegal, but employers really need to understand that. And what it tells me is this model was never designed for the member. We never had the member in mind. And when there's no true transparency requirement and there's no audit rights, that's not an anomaly. That's actually the business model working exactly as intended, which is it. I mean, it's irritating for those of us doing this the right way, and helping to educate the brokers actually makes my job pretty exciting. And the job that you guys have, which you're doing a fantastic job, by the way,
Thanks,
that you have to educate our brokers and help them be the best that they can be for their clients. So what to me, what makes the lawsuits particularly painful is who's suing who. And you mentioned it, Chris. It's the employee suing their own employer. That's not a great relationship. And the person that person the benefit was actually supposed to be for is now going to court, taking their employer to court, and that's just not healthy for a business. And the employer oftentimes is as much of a victim as the employee because they trusted their broker, the broker trusted the PBM, and nobody was looking at what the pharmacy was actually getting paid, and nobody was really digging in the contract. So spread pricing, it doesn't just hide margin, it erodes the trust at every single level. And when it finally surfaces, everyone loses except the PBM that was, I mean, they're pocketing the difference. So you have to dig into these contracts much deeper than what people had traditionally thought.
Well, absolutely. I mean, you can't just go about the same process we all do with our phones. When you get the new terms and conditions, we just accept it to get it off our screen.
Right,
And for
exactly.
years, that's been happening in the PBM space. I'm glad that now things are kind of changing. So, how does a medication that can cost under $30, let's just say, end up getting billed to the plan for thousands? I mean, you look at this in a different industry. If this was Wall Street, these people would be getting arrested on a daily basis.
Yeah, absolutely. We probably have half the employment in the pharmacy industry if that's been happening.
Yeah,
But
yeah.
it's a good analogy. It happens because the PBM is sitting in the middle of all these transactions, and they control all that information, right? They control what's going out, they control what's being paid, and they tell the pharmacy that here's what you're going to be reimbursed, and then they tell the employer this is what you're going to be charged. And nobody in the middle was required to show both numbers to the same person. There was no incentive to do so because it would have exposed that, again, that spread pricing. And on Wall Street, I think they call that information asymmetry. And I mean, yeah, in other contexts, people do get arrested for it. So the difference here is that spread pricing is contractually permitted. And that's the good news, actually. It's contractually permitted, meaning the brokers, our partners in this, can see the language in there and they can request changes. So the employer signed off on something that allowed it. They just didn't know what they had signed, but now the brokers have the ability to correct that. And that's why transparency isn't just a nice to have item. When you have a $28 drug, I believe that's what you said, that gets billed at thousands of dollars. That's not a glitch. That's a feature of a system that was never designed to be seen by the employer, by the client, by the broker,
Right.
because it's revenue.
Mm-hmm.
I remember when I joined and I started hearing about this. It blew my mind. It absolutely just blew my mind. And I hope people listening to this have the same effect. If you didn't know about it, this is mind-boggling. But let's look at this from a rarity standpoint. If average markups across hundreds of generic drugs can be reported, let's say at above 200% above acquisition cost, is that rare or is that more common than people think?
Be careful, Chris. You're now starting to expose the industry's dirty little secrets. There's actually no published average because transparency is exactly what the model, the spread pricing model, is meant to avoid. But we do have enough data points now to actually paint the picture. In fact, it's interesting. The FTC found that of the three largest PBMs, they impose markups of hundreds of thousands of percent on specialty generic drugs that has generated over, now this is again going to be with a B, 7.3 billion in excess revenues from 2017 through I believe it's 2022. 7.3 billion in excess revenue. And then you look at the government healthcare. You look at the Medicaid side. The numbers are absolutely stunning. I believe it was Ohio that found PBMs were pocketing about 225 million in spread in a single year out of I believe it was a 2.5 billion spend. And then it was Pennsylvania. Pennsylvania actually saw taxpayer payments to PBMs that more than doubled over a 4-year period of time. And those are just the states that actually did the audits. For you look at, we brought up generics earlier, right? We assumed 90% generic utilization, but for an everyday generic, a PBM might pay a pharmacy $80 for a prescription that bill the plan $100. So that's automatically a 25% markup on just a single claim. Multiply across, we use the example of 9,000 claims, but there's millions of prescriptions that are being filled, millions of generics. And on the specialty drugs, it's exponentially worse, even though it's lower volumes. It's just higher dollar amounts.
Right.
Yeah, it's absolutely crazy. I mean, everyone uses a spreadsheet to come up with what PBM to work with. You use it for the same thing from a revenue standpoint. That overage is absolutely insane. Math is not mathing. Public school as well too, but I could do that math. But let's talk about the good. If an employer is being told, "Hey, your pharmacy spend is now under control," hooray, confetti pops, fireworks in the air? Should they continue to celebrate and just go off of that trust? Or are there a few more questions they should really be asking?
Good question. First, I want to go back though. We are not knocking public schools. My children went to public schools. They're all doing excellent. So
Agreed.
anybody out there involved with public schools, we love you. Thank you for the hard work that you do. You are on the front
Absolutely.
lines. We appreciate it. Really, it's ask more questions. They have to ask more questions. If somebody says that your spend is under control, it's really a dangerous sentence in the benefits business. So it's answering the wrong question. The right question isn't whether their spend went up or down. It's how the number was calculated and what's behind that number, right? So the employer might be very happy with what they're paying, but maybe you could be spending less. So if your PBM's telling you your spend is flat, ask what the pharmacy was paid. Ask to see the spread, at least on your top 20 claims. I mean, you don't have to dig into the entire file, but look at those top 20 claims because that's where a lot of money is being spent. And ask for an independent audit. Your PBM agreement should allow for an independent audit. Sometimes you'll have to pay for it, but if you're with the right PBM, they're actually going to give you the data. They'll give you the NDC 11 level data in order to be able to truly understand what is happening. And then, because it's really under control, going back to your comment about, everything's under control, your spend is under control. Because under control in a spread pricing model might just mean that the markup was consistent. That's not really control. That's a well-hidden problem that nobody looked for. So the employers who got sued didn't think they had a problem either, yet look at the situation they're in.
Right. And once numbers like that start showing up publicly, it just stops being a plan issue and it turns into an industry accountability issue. It gets bigger than one employer and bigger than one PBM. The whole pharmacy benefit world is getting more scrutiny now, Brian, not just because costs keep going up, but because people are starting to understand how these costs are built. As more employers actually start digging into their contracts and claims, the pricing models have been around forever, are finally starting to get challenged. And honestly, that creates both risk and some opportunity there too. So for employers and brokers, the question isn't, should we pay attention? It's how fast we can catch up and adjust. With spread pricing getting challenged more publicly, Brian, what changes do you think employers and brokers will see first over, let's call it the next 12 to 24 months?
Boy, that's a great question. I really think there's probably three things that are really going to come out of this. And what they should be watching. First, there's no question contract language is going to get more scrutinized. Lawsuits are forcing the employers and their legal teams to actually read what they signed and then understand the language, right? PBMs that have been hiding behind complex contract language are going to face a lot more pushback at renewal because of what's being exposed. So contract language first, that'll change. Second, brokers are going to be held more accountable. There's no doubt about that. We recommended the best contract available defense that someone might give you. It's going to be harder to make when courts are asking why nobody actually audited the PBM. And plus, on top of that, your errors and omissions exposure, those conversations are going to start happening because you start making these errors. These can add up, as we mentioned, just in the spread pricing of that one example of $90,000. That adds up pretty quick. And the third, the employers who move first to get to pass-through transparent models, they're actually going to have a pretty significant advantage both financially and legally. So even if they had made some mistakes in the past, because they recognize it, because they made a change, it's not going to be considered gross misconduct. They just found out something that they weren't aware of. So when the next wave of lawsuits actually hit, the question won't be, did you have spread pricing? It'll be, when did you know? And what did you do about it? So employers that move quickly to get away from that are going to be much more in a better position to defend themselves. So the window to get ahead of this is open right now. There's no question. And I think that's why we're seeing a significantly higher volume of activity. But that window won't stay open forever because we have a litigious society out there. And so we have to be careful. We have to protect ourselves.
Yeah, I agree. With the CAA 2026 requirements, Brian, do you think spread pricing is about to get fully exposed, or will it just evolve into some different form?
I think a little of both, Andy. I think it's a good question. CAA was a really nice legislation that came out, but the CAA requirements are the most significant transparency mandate that employers have ever had, which is fantastic. And for the first time, plan fiduciaries are now legally required to demonstrate that they actually understand what they're paying for, which is a direct threat to spread pricing model, right? There's a lot of PBMs that don't like this because you can't have claim transparency, right? While hiding margin between
Right.
you and what was charged at the pharmacy. I mean, that's like, somebody going and stealing a car and driving it to the police saying, I just stole it.
Yeah.
So yeah, it's going to get exposed. Employers who engage with their CAA obligations seriously, they're going to see numbers that they've never seen before. And some of those numbers are going to be a little bit uncomfortable. But you know what? You have to directly face it, own up to it, and move on, because you're actually going to start saving the organization a significant amount of money going forward. But spread pricing, it's not going to go away quietly. It's already evolving into administrative fees buried into network contracts or into specialty carve-outs, mail order margins. It's just harder to see some of those. So the name changes, but the behavior doesn't necessarily change.
And for all the employees tuning in or the employers tuning in right now, if I'm a company, Brian, what's the first question that I should be asking my PBM?
Show me the money. What was that, Jerry Maguire? Show me the money, right?
Right.
So show me what the pharmacy was paid, claim by claim. Show me what you billed us for the same claims right now, today. There's no reason to hide behind any contract language. It's easy enough to show that, and that's it. It's just one question. So a transparent PBM, if they're going to hand that over, we're going to hand that over without hesitation. And a spread pricing PBM, either they can't produce it. My favorite, they say it's proprietary. That's always wonderful. It's proprietary what we're making off of you, or they bury you in a report that doesn't really answer the question. So I've seen some of the ambiguity in these reports. But the response you get tells you everything you need to know, faster than any RFP that a broker could have us do, any benchmark report, or any renewal presentation ever will. If they aren't giving you the details, it means they're making money.
And a good PBM would say, when you ask for that, say, hey, you had me at hello.
You know what? It always comes down, and I suspect that we're going to have a lot of brokers that listen to this. And I wanted to acknowledge that the brokers are out there doing fantastic work, right? And they are trying to get ahead of all this, and a lot of them are on top of it. But if a broker is suspecting that there's a problem, just dig into the claims data. Specifically, ask for pharmacy level remittance data. That is not difficult to produce, and that shows you what the PBM actually paid each pharmacy on each claim next to what the plan was billed. And if the PBM says that data is proprietary, well, there's your answer right there. They are hiding that spread pricing. They don't want you to see it. So if you do get the data, look at the generics first. That's where spread hides, really most comfortably, because we talked about it's not as big of a price variance. A $20 drug, you mark that up by $2, it's another 10%. Generics should cost $8, getting billed at $40. That's not an anomaly. It's the model that is working as designed. And I think I've said that 3 times now, where it's a model, meaning it's working as designed. And it's just kind of disgusting that it's designed that way. But, and then after you look at the generics, look at the mail order, look at the specialty. A lot of PBMs, they own pharmacies where the margin, it's getting pretty aggressive. So the FTC confirmed that affiliated pharmacies disproportionately dispense the highest markup claims. So, and you can look that up. The broker's job used to be simply getting the best contract. So, really what the broker needs to do, as I started along this little rant of mine, is, make sure the contract can actually be audited. And if your client can't verify what they're paying, they don't have a contract. They have a trust exercise at hand, and they really need to dig into that.
Yeah, trust is never a business model for anybody.
Exactly.
So let's let's rewind the clock for you, right? If you could go back to your broker days and you could take everything you know now with you, what would you do differently?
Well, I would have been a jerk. We're talking about movie quotes here. What's the line for the jerk? Steve Martin. Honestly, I would have just asked a lot more difficult questions, and I would have done that a lot sooner. When looking at a PBM presentation and it's nice and clean, and here's all the wonderful rebates that you made, and the client's feeling good. I should have known that something's a little too good to be true. So should have just slowed down. The more confident the pitch was, the harder I should have pushed back. And because then you start to, if you can make them a little uncomfortable, then you're asking the right questions. I would have certainly required audit rights in every single contract. That's non-negotiable. Contracts did have audit language in there, but there were a lot of ways that PBMs can get out of it. So I don't want it to be a nice to have. I want it to truly be a condition of doing business. So definitely should have done that more. Excuse me. And honestly, I would have been just a little more curious on how the PBM was making money. We see the savings, we see the rebates, but we don't dig into how are they making money, and not just what they're charging the client, but where's the margin, right? Where's the additional fees? Where's the per script fees? All the things that there's so many ways that a PBM can make money in this industry. Because if you can't answer the question cleanly, then the client is the answer. That's where they're making their money, and the client just doesn't know. So the biggest thing I changed is this. I confused a smooth renewal process with, oh, this is a good outcome. And they're not the same thing. But I understand that, right? When you're a broker, you want everybody to be happy. You want everything to run smooth. That means the client's happy. But are you doing the best you can for that broker, right? It's a very competitive market. Is another broker going to come in and start digging into that data and find that spread pricing where you didn't find it? And that's where brokers need to be very, very careful, because a good outcome means your client actually knows what they paid and what they got for that. So anything short of that, and you're just managing a relationship, you're not truly protecting the client, and in fact, your client is probably at risk. And I don't say that to be dramatic. I say it just because the system was so specifically designed that to never show the numbers. If shock was unlikely, transparency wouldn't be fought so hard, right? If they're fighting to keep that data away from away from all of us, it's classified, it's proprietary. That means there's something that they don't want us to see. And the employers have gone through a true independent audit where someone actually pulls claim level data and matches it up against what the pharmacy was paid. The reaction is almost always the same, and that's disbelief, that's anger, that's embarrassment. And then you start to dig at how long has this been going on, right? Because that's where the numbers really start to add up. And that last question is the hardest one, because it's usually not months, it's years. Sometimes decade of renewals where everyone said things look fine, and we've already identified how easy it is to have that add up to $1 million over a decade. So the real number isn't how many would be shocked, it's how many will never find out. That's the scary part, because nobody ever asked the right question. Nobody ever required the audit that would have truly shown what those numbers look like.
Ryan, VP of Sales at DisclosedRx, appreciate you joining us today and helping us unpack this topic. Spread pricing is one of those issues that can sound technical on the surface, folks, but once you understand the mechanics and the impact, it becomes impossible to ignore. If you're an employer or a broker listening to this, the takeaway is simple. You don't need all the answers, but you do need visibility. So if something doesn't make sense, it's probably worth digging into. And we'll keep helping you dig. This is Full Disclosure. We're Andy Rodriguez and Chris Estep. Talk soon.
Thanks, guys.